Hello guys, good evening. So in the previous class, we spoke about primary market, and also we spoke about the IPO process and what are the high IPO participants we have. Total participants will be involved in the IPO, and also we discussed about the documents involved in IPO like DRHP, RHP, and what is green shoe options. And we spoke about FPO and also about types of placements, private placements, and QIP,
Okay.
qualified institutional placements. All these things we spoke, and also we spoke about underwriting as well, right? We
Yes,
discussed
sir.
about underwriting commission, underwriters also, right?
Yes, yes,
Yes, sir.
Yeah. So
Yes,
in
sir.
this class, we are going to talk about the secondary market. Okay.
Yes, sir.
Is everyone able to understand the concepts?
Yes, sir.
As of
yes,
now, till IPO process, everyone clear, right?
yes, clear.
Why companies
Right, sir.
will go for IPO? How it will happen? How the companies money from the public? Everyone sure, right? Even non-commerce students also.
Yeah, Mahesh.
Okay. Let's proceed with the secondary market. What do you guys understand by secondary market? We discussed about primary market. It's a place where first time the shares will be created from the issuer of the company, and if anyone wants to purchase shares directly from the issuer from the company itself, IPO is the only choice we have where we can go and purchase directly from the issuer of the company. That's we call it an IPO. Then what is the secondary market? So in the IPO, once shares issued to the public, where the I mean, where is the place that entire shares will be listed?
In stock market,
In stock
BSC
market,
or
right?
BSC or NSC.
We spoke like once IPO is done, the entire shares will be listed in the NSC or BSC, nothing but stock exchanges. So while in IPO, we know from whom we are purchasing. From whom we are purchasing the shares in IPO?
Direct company.
Direct company. Have you guys done any trading in the stock market?
Yes,
Anyone here doing
yes,
trading?
I am doing.
Okay. So can we guys identify the person from whom we are selling to whom we are buying? I mean, selling and from whom we are buying the shares. Can we identify
No,
the person name?
no.
No. So, but still we are able to purchase the shares or we can sell the shares, right?
Yes,
So, can we say like a secondary market is a place where we can transfer the securities between the buyers and sellers without knowing each other? Can we say like this?
yes, correct.
Yeah. So, secondary market is nothing but it's also a market. Secondary market is nothing but a BSE NSE stock exchange through this trading platform. We call it as exchange trading platform. So, we have a BSE Bombay Stock Exchange as well as Nation Stock Exchange. Two stock exchanges we have. So by using the stock exchanges, these are the main stock exchanges in India. Most of the companies will be listed in the either NSE or BSE, and sometimes in both stock exchanges also shares will be listed. So if anyone wants to purchase the shares, we can go ahead and we can purchase the shares in the stock market. Again, it's from the unknown parties. The parties' identity only disclosed in the secondary market. There will be a intermediary, or we can say exchange trading platform. In the trading platform itself, we can go and purchase the securities. It is not only for the shares; it includes for the commodities. We have a multi-commodity exchange. We call it as a MCXE. You guys heard about
Yes,
multi-commodity exchange? This is also trading platform where we can trade security. I mean, the commodities. Commodities means what kind of commodities? Crude oil, gold, silver.
gold, silver,
These are all the
crude oil.
instruments where we can do trading in this MCXs. I'll show you the platform as well for the same. Basically, these are the trading platforms where we can purchase or sell the securities. But the secondary market is only after the IPO. IPO, I mean primary market. The primary market shares will be issued from the company to the public. Once shares listed in the stock exchanges, here we can purchase and sell the securities. Okay. Now we will see few important terminologies that we have in the secondary market. Okay. The first one is intraday trading. Intraday trading. Now, what is intraday trading?
Same day purchase and selling should be completed.
In the stock market, let me share my screen. take top 5 gainers and losers. Okay. Can you see this? Open price. Open price means price at which the market opened for this HDFC securities. It's showing 1557. What is the highest value that it has reached? Same highest is also same 1557. Lowest is 1508. And the closing price is 1512. It's in a loss. Suppose today itself, if I purchase the share, let's assume I have purchased the shares for 1557. By today evening itself, can I sell the share?
If you buy through intra-trade, you can sell it today only.
So it's nothing but intraday is nothing but if you are purchasing the share and selling the share in the same day. I mean the buying and selling of shares on the same day if it is happening, that's we call as intraday trading. If you buy the shares and sell the shares, so the liability to pay the money and also the paying shares arise in the same day itself. By evening itself, we have to pay amount to the buyer. If you are selling the share, by evening itself, you have to deliver the shares as well. Both liabilities will be in the same day. This is called intraday trading. And also, we might have heard about this word called bullish and bearish. Did you guys heard about it?
Yes, Mahesh.
Bullish and bearish.
Yes, Mahesh.
What is bullish?
Bullish means market is trending, going up,
What about bearish?
down.
Down. So bullish means we will always
Right.
take a long position because we expect the price will go up. Suppose this today market price is started with 110 rupees. We'll expect that market, I mean the share price of this security will go up to more than 110, like 111, 112, 113. If we expect that price of the security is going up or increasing, that's what we call as a bullish market. Bearish means if we expect that price of security will go down, that is we call bearish. Understood? Is everyone understanding?
Yes. Yes.
Yeah. So now we will discuss few more concepts. How we will make a profit in this intraday trading? Can anyone expand? Suppose on the same day, if I'm purchasing and selling the same securities, how I will make a profit? Any idea? How practically it will work? Let's take an example, the same company,
You can
HDFC itself. It opened at 1557, closed at 1508. In this case, if I purchase this share, HDFC share, will it make a profit or loss?
if you purchase the share, it will be loss.
Loss.
If you sell the share in the 1557 and buy the share up to 1508, it will be profit.
Is everyone understanding the question?
Yes, Mahesh.
Remaining guys,
Yes, we understood.
suppose if I am purchasing this share, Chandramouli, keep it and quiet for a few seconds. Let them understand.
Okay. Sorry.
So we are purchasing the share at 1557. Okay. And if we can sell the share on the same day, let's forget about the price. Okay. If I purchase this HDFC security, and also if I'm selling the same security on the same day, will I make a profit or loss? Jyoti?
So you can get profit or loss, anything.
What is your understanding on this? Can I make a profit or loss? Because the security price opened at 1557, but closing at 1512. The lowest price is 1508 and closed at 1512. If I do any trading, buying and selling of the same HDFC security price share, will I end up with a profit or loss?
Mahesh, it's loss, Mahesh.
Is there a chance to get a profit? You are saying that okay, maybe the price of security opened during the morning time is 1557, sir, but ending is 1512. Even if you see the trend also, it will be the graph will be like downwards only, like this only. See this here. Starting price is this much and ending up with this. So is
Yeah,
there any
sir.
chance to make? Is there any chance to make a profit in this case?
Yes, sir. Sir, I can tell Telugu.
Yeah, tell me.
సార్ ఫస్ట్ సెల్ చేసేయచ్చు సార్. తర్వాత వాళ్ళకి హ్యాండ్ ఓవర్ చేసేది ఈవినింగ్ కాబట్టి తర్వాత పర్చేస్ చేసి సేల్ చేస్తే అప్పుడు ప్రాఫిట్స్ వస్తాయి సార్.
Yeah, exactly. That's all I wanted to understand. Yes, it doesn't mean that if share price is reducing, I mean, share price is going down, it doesn't mean that we will always make a profit. We will make a profit when the purchase price is more than the selling price, then we will make a profit. Let's assume in layman terms, if you go to one tomato market, vegetable market, okay, you are damn sure that definitely prices will go down by evening. Maybe while you enter into the market, the price is like showing 1,000 rupees per kg. How much? 1,000 rupees per kg. By evening, definitely the price of tomatoes will fall down up to 700 per kg. Okay. Suppose if you are selling this product, if you are selling these vegetables, you have a time till 5 p.m. The deadline is up to 5 p.m. Similarly, if you purchase the tomatoes, the deadline is same. We have to pay that money within 5 p.m. Up to 5 p.m. you don't need to pay any money though you purchase. At the same time, till 5 p.m. you don't have a liability to give the products also, hand out the products. You have a time till 5 p.m. It can be for the delivering of vegetables, or it can be delivering of money, paying money. Both liabilities start with 5 p.m. Now tell me how you will make a profit in this case. I want a profit. I can get 300 rupees profit in this case. Suresh,
Yes, bro.
tell me how it's possible.
Yes.
Morning price is
తీసుకుని
1,000, evening price is 700. We are expecting that evening definitely the price will go down up to 700 rupees.
ఈజ్ లోయెస్ట్. ఫస్ట్ లోన్ తీసుకున్న వెంటనే ప్రాఫిట్స్ వచ్చినప్పుడు సేల్ చేస్తే మళ్ళీ ఈవినింగ్ లోపు మనకి రిటర్న్స్ ప్రాఫిట్స్ అనేది వస్తాయి.
See, you entered into the market 9 a.m. The price is how much?
Yes. So
1,000, right?
2,000.
So definitely at morning time also there will be buyers who can purchase at 1,000 rupees. Though you do not
Buyers
have,
only.
though you do not have vegetables in your hand, you can sell it, right? Because you have time till 5 p.m. By 5 p.m. you can deliver the tomatoes to buyer.
Buyers.
What you can do? You can sell this 1 kg of tomatoes at 1,000 rupees.
1,000 rupees.
You can sell it, right?
Yes.
So let's assume you sold it for 1,000 rupees. If you are selling this 1,000 rupees, by evening you will get 1,000 rupees because the buyer have to pay 1,000 rupees to you. And what you should pay, what you should give, what is your liability? You are selling vegetables for 1,000 rupees per kg. What is your liability in this case?
I want to give tomatoes for.
Yeah, we have to deliver the tomatoes, right?
Yeah.
By evening we have to deliver 1 kg of tomatoes. How you will deliver? You don't have tomatoes in your hand, right?
Yeah, sir. When tomatoes price is decreased,
Evening I will be
that
purchased
time
on.
I'll purchase and give.
So we will wait till 4 p.m. 4 p.m. The price is only 700 rupees. So what you will do? You will buy at 700 rupees
4
only.
p.m.
You can give these tomatoes to that buyer and you will also give this 1,000 rupees. You can make 300 rupees profit.
Yes, sir.
This is how we can make a profit even the market is in downturn. It doesn't mean that we will make profits only where prices are going rise, increasing. No, even the market is in down, we can make a profit. This is called short selling. What we call it is
Short selling.
very, very important word. It's a strategy. Short selling is a strategy. So in this short selling strategy, you know what we do? What is it? In this short selling, without holding any securities in our hand, we can sell the securities. And whenever the price go down, then we will purchase the shares and we will deliver the securities to the buyer. That concept we call it as short selling. So when we do this short selling, in case of bullish or bearish, in which scenario
Bullish.
it is possible?
Bullish.
or
Bearish.
Bullish.
Bearish.
Mallikarjuna, in bullish or bearish?
Bearish. Bearish.
Ashwath,
Yeah, in bearish condition only.
bearish, ah?
Yeah, short selling can be done in bearish for profit.
Lokesh, Lokesh, are you there?
Bearish bro.
In bearish, what will happen? Share price will go down. I mean, we will expect that price will go down. So in that scenario only, we can execute this short selling. Now you understood, right? Everyone.
Yes, sir.
Yeah. Then we have next concept called stock lending scheme. Stock lending scheme. You know what is this stock lending scheme? It's like automatic lending. We can borrow the shares also from someone else. Why we have to borrow the shares? Suppose I borrowed 500 shares from someone else. Let's say from brokers or someone. I borrowed this 500 shares. Borrowed. So with this borrowed shares, I can do the trading. I can purchase, I can sell, I can purchase, I can sell. I can do any n number of transactions with this 500 shares. I can make a profit. And there will be delivery period. Let's assume I borrowed these shares for 1 month. So after 1 month, you have an obligation to deliver how many shares?
500.
500.
500 shares only. 500 shares I borrowed. So in return also I have to provide 500 shares only. Let's assume I borrowed these shares at rupees each. Each share price is 12 rupees. Okay. After 1 month, share price is 7 rupees only. Share price is 7 rupees. Should I provide any loss also? I mean, should I have to pay amount also for this loss? Because while purchase, share price is 12 rupees. But after 1 month, share price become 7 rupees. Should I pay the difference amount also to the lender?
No. You need to deliver only shares.
Only the shares. Whatever the price prevailing at the market, I'll deliver that the same price. But for doing all this service, what I have to pay? Will they provide it free of cost? 500
No.
shares for 1 month.
Brokerage charges.
Brokerage
Then they will make
charges
some
are
charges as well. They will make some
standard charge.
changes as well. Like they will charge lending fees. The price will be determined. So as per that prices, the lending fees also will be collected. But during this 1 month, you can do any number of transactions. You have 1 month time, right? Every day you can do n number of transactions. Though we have 500 shares, we can perform any number of transactions and we can make a profit or we can make a loss also. There is a possibility for making both profit as well as loss. But there is a time duration up to 1 month. And there will be lending fees as well. This is called stock lending scheme. Is everyone understanding? Is everyone understanding?
Yes, Mahesh.
Let's assume I end up with a lot of losses. I have done a lot of transactions within this 1 month. I got a huge loss because of doing trading with these 500 shares for 1 month. I got a huge loss. Now, can I deduct or can I reduce this lending fees?
No.
See, this lending fees is a fixed amount, guys. Fixed amount of lending fees to the lender, irrespectively. Whether you make a profit or loss, you have to pay this amount. Even if you make a huge profits also, we don't need to pay extra amount. As per the fixed lending fees, we can pay.
In this case, a small example, Mahesh, if you suppose
Yeah,
if
please
we
go ahead.
take 1 lakh rupee, 3 rupees interest for anyone or for 1 month, after that we are doing whatever the business and everything. If it is loss or profit, we have to pay 2 rupees or 3 rupees interest. And with 1 lakh,
Yes.
same like that, no?
Yeah, same like only.
Yeah.
Yeah. But we are borrowing the shares actually here.
Just for easy understanding, I'm saying that.
Yes, I understand. That is also borrowing, right? Instead of borrowing cash, we are borrowing shares, number of shares. So with this number of shares, we are going and doing the trading. Okay. I'll show you the order book. The first concept itself we will discuss about this order book actually. Do you know what is order book? This is the order book. What you can see here in the order book?
Buying quantity, buying price, selling quantity.
We can see order book is nothing but top 5 buyers and top 5 sellers will be given. Recent, or we can say top, not top, the recent 5 transactions from the buying side as well as from the selling side. We can see in the order book. The order book will be displayed in the NSE website also. I'm not sure where can we see. Now it's not going to be available. Only during the live, I think it's available. Yeah, here you can see. No, it's top 5 gainers and loss.
No, it is not available NSE direct site.
No, normally it will be available. From the trading platform, I think it will be available. Maybe if you're doing trading in any brokerage app, there you can see it.
Yes.
So there you can see the recent 5 sellers and 5 buyers as well. In this example, you guys can see the screen, right? The order book, the orange color one.
Yes, Mahesh.
Yeah. See here we can see the buying quantity 500 rupees and the buying price 5250. Can everyone see this? It means
Yes, Mahesh.
there is a bid to purchase 500 quantity of shares at what price? 5250. The sellers also ready to sell the shares at what quantity and what price? Sellers also ready to sell at 5252 at 1650 number of shares. Suppose if this trade wants to execute, will it work now?
No.
The trade will execute.
No.
First trade, buying trade.
No,
The
that will
buyer
not
quoting a trade to purchase 500 shares at rupees 5250. Will it execute? At this scenario, with this order book scenario.
No, it is not executed. Sorry.
Why it won't execute?
The same price will not be there for selling.
The same price is not there. Even less than that 5250 is not available. Sellers are ready to sell. The quantity is available. We have quantity 600, quantity 100, 50, 50, 1650. All these quantities are available. But the price is 5250. The selling price is 5250. Buyers are quoting only 5250 as a maximum. So there is no match between the buy price and sell price. So the order won't be executed. If this order wants to execute it, then what we have to quote? We have to quote at least the sell price 5252. We have to quote. Then only we can execute this order. Similarly, from the seller side also. Sellers are quoting all 525252, everyone. But there is no buyers. There are buyers are not available to buy the securities 5252. So these orders can't be executed. So order book is nothing but recent 5 buying options. I mean the bidding from the buy side as well as from the seller side will be displayed, so that we can assume and we can come to judgment about our bidding for the buying and selling. Accordingly, we can quote our prices for the buying or it can be for the selling of securities. Understood? Everyone?
Yes, sir.
Yeah. You know what is the trading timings in India? We are talking about only Indian trading firm.
9:15 to 3:30.
9:15 to 3:15.
3:30.
No, 3:15.
Someone saying 9:15, 9:13.
9:15 to 3:30.
Actually 9 to 4, sir.
9 a.m. 9:15.
Yeah,
9:15.
9 a.m. to 4.
9:15 a.m. to
3:30 p.m.
3:30.
3:30
p.m.
Only this is the trading hours. Huh?
One more
No,
is there.
there will be
One,
9 to 9:15 free
9
market.
to 9 o'clock to 9:08 pre-market is there.
9 a.m. to 9:15 free trading, sir.
9:08 to up to 9:08.
Inka?
3:30 to 4
Fine,
after
guys.
market hours.
10:30 to
There
4
is a
PM.
concept called pre-trading and post-trading hours also. Normal trading hours is 9:15 to 9:30, but there is a concept called pre-trading and post-trading as well. Now, why we have this pre-trading and post-trading? First, we will understand what is a pre-trading and what is a post-trading. Pre-trading means before starting the regular timing from 9:15, we can place the orders from 9 o'clock itself. We can enter the orders from 9 a.m. itself. So let's assume from 9 a.m. to 9:15 we have this pre-trading session. Again, this 9 a.m. to 9:15 up to 9:08. 9:08 we can place orders. Can be for the buying and selling. Orders can be executed, and also we can cancel the orders. We can modify the orders. Whatever the orders that you are placing from 9 a.m. to 9:08, there won't be execution. Orders won't execute. Even till 9:15 also there won't be execution of orders. From 9:08 to 9:15, orders matching will be done. They will try to match the orders. Whatever the order that will match up at 9:15, that order only will be executed. From 9 to 9:15, we can place the orders, we can change the orders, we can cancel the orders. Basically, from 9 to 9:08, orders execution will be done. Like not execution, order entrance will be done. We can place the order and we can modify it, we can cancel the order. From 9:08 to 9:12 or 9:15, the matching session will be started. Like the buyer side and seller side, the order matchup will be done. If everything seems correct and everything is going good, then at 9:15 we can have a regular trading session. The regular trading will start from 9:15 and it will continue till 3:30. Again, after 3:30 also, again we have a post trading session. Why we have
3:40
this
to
post trading
4.
session? What is a post trading session?
We can score
If
of
it is
the
a pre-trading
position.
session means we are opening the market even before starting the regular market, right? Then what is this post trading session? From 3:40 p.m. to 4 p.m. For 20 minutes, there will be post trading sessions. So suppose if you want to square off any positions, if you want to exit from the market, we can place the orders. We call it as a closing session. If you want to square off any trades or something, we can square off the securities in this post trading session. For that reason, we have this post trading session. The main reason to having this pre-trading, post-trading, we had known this concept from the day one itself when stock market started. I think this method has been introduced in the 2009 only. Before that, we had known this concept called a pre-trading session. 2009 only it has introduced. You know why we have introduced this concept? Any idea why we have these sessions? Pre-trading and post-trading sessions? Any idea?
No, my.
You know what is the first market opens across the world? Which country's stock market will open first?
Singapore?
No.
Indian market only, I think.
Yes.
Indian market.
Oh, sorry, I
I
just
think,
did it 2 hours late. Okay, sorry, 2.5 hours late. GXP.
USA markets midnight start అవుతుంది.
ఇంకా
London market.
you know Japanese market?
Yeah, Japan actually sunrises first.
Yeah. So Japan and US both are in the same zone, I think, but there will be different. But majorly the first market will open from the Japan only. So what was happening in before 2008? There was always a lot of volatility because whenever there is a crash in the US market and Japanese markets in the morning time, Indian stock market also used to open with a huge gap down because of this panic selling. Suppose let's assume in the Japan there will be a lot of weather conditions. It's a bit different and their economic situation is different. There is a crash in the Japanese market, US stock market. Definitely the same impact will be there in our Indian stock market also, right?
Yes.
So there's always a lot of gap, and because of those crash and those economic situations, our Indian stock market is also impacting a lot. So if you get that kind of news, let's assume even nowadays, though we have a pre-trading and post-trading session during the US elections and Japan elections and all, we will be having a lot of fluctuations in the stock market. Again, to avoid that fluctuations, to stabilize this volatility, they have introduced this concept called pre-trading. So what they will do, they will try to observe the security market prices. So both from the buyer side as well as from the seller side, they will observe from the stock market side, they will observe the stock market prices. I mean, from the what is the buying quantity, what is the buying price and selling price. Seems everything normal or not, like that they will observe. If they find if it is abnormal, they will stop the stock market. They will keep it in a halt. They will keep it in a halt. We call it a break. They will be giving a circuit break also. We call it stock market halt. Again, depends on which day, which time it's happening for the stock market halt. Accordingly, the stock market will be resumed after a few minutes. To understand this volatility and impact on Indian stock markets, they have introduced this concept called pre-trading. So to eliminate the excess volatility in the market exchanges, so has come out a concept called pre-trading, where even if the price matches the order, it won't execute. Pre-trading happens between like 9 to 9:15 only. So we have a time to place the orders. Everyone is allowed to place orders from 9 o'clock to 9:07, and it will give us the time to modify and cancel the orders also. Whatever the order book showing at 9:15 exactly, 9:15 a.m., that order will be executed. That is the order book. Order book will start from 9:15. The actual execution order book will start from 9:15. Whatever the price is prevailing at the order book at 9:15, those orders only will be executed. So basically, the stock market and the people have a time for 15 minutes to observe the stock market prices and volatility. For that reason, they have introduced this concept called pre-trading and post-trading. And post-trading just for the square of their positions. During the trading time, if you forgot, if you want to square up the trades, we can use this post-trading sessions. Post-trading is nothing but exiting the position path. If you have taken a long position, then if you want to take a short position, we can square off it. Again, we'll talk about it. What is long position? What is short position? We'll discuss. But as of now, try to understand the concept of pre-trading and post-trading. Now, everyone clear with this? Pre-trading and post-trading?
Yes, sir.
Everyone?
Yes, sir.
Now, we will discuss few more terminologies that is involved in the stock market. There is a concept called tick size. Already we discussed the tick size in the primary
Yes, sir.
market. Yeah,
Yes,
it's
sir.
nothing but minimum difference between two orders. Minimum difference between two orders. Someone got a, order executed, or else, let's take this order book example. Here, see, there is a buy price for 5250. Another trade is at buy 5249.20. What is the difference between these two orders?
80 paisa.
At 80 paisa, 0.80 is a tick size here. This is called tick size. It's nothing but the minimum difference between two orders. It's called tick size.
Lowest increment of price.
Yeah, the lowest
Changes for
increment of
the every
prices.
bidding.
Yeah, for every bidding there will be lowest increment, or it can be reducing also. Here, see, there was a 52520.
Mahesh, go to NSE. Go to NSE site, market data. It is there in the order book here. Select any market data, select any share. Come down. Select HDFC or anything. Come down. Shares are there in down. No. Come down completely. No.
Yeah, here we have order book.
Yes, order book is there.
It's not showing now, but normally during the live it will be available.
Check HDFC is available something right now. HDFC.
Yeah, it's not available. Maybe the last price, I think.
No, in my market is available actually.
No, nothing is available. It's all blank.
No,
Only one
it is
price available.
it is available actually. I have opened.
Okay. No problem. We will see it in the live session also. I'll ask my friend to take a session on the live trading as well. Okay. Once we are done with the derivative concept, then he will take, because he's trading majorly into the equities and derivatives only. So he will guide you guys. So tick size is nothing but the minimum difference between two orders. That's what we can remember. And we have called liquidity. Already spoke about liquidity, right? What is liquidity?
Closing, completely selling that whatever shares we are
We
having.
should be able to
Completely
sell our products. That's we call it the normal meaning of liquidity. In this trading perspective, trading liquidity means it refers to the number of shares traded in the stock exchange in a particular day. In particular day, how many number of shares traded? It can be for the buying or it can be for the selling. How many number of shares traded in the stock exchange in a particular day? That is called liquidity. Okay, and there is also cost called impact cost.
Volume also same, right?
Yeah, volume is also same. Volume and number of shares both are same.
Yeah.
Impact cost. Impact cost means normally whenever the prices are very high and if you are not purchasing and the number of shares traded in the stock exchange is very less, in that case, the impact cost will be very high. There is always an inverse relationship between impact cost and liquidity in the stock exchange. You know why this happened like this?
Please one more time.
So impact means whatever the cost of executing the transactions given in the stock market is called impact cost. At a given point of time, there will be a cost of execution, right? For every transaction, for every happening of trading in the securities. That is called impact cost. There is a formula as well to calculate this impact cost. Suppose we have a lot of transactions happening, the liquidity is very high, then the impact cost will be very less. Impact cost will be very less when we have a lot of tradings. And impact cost will be very high if you have a less tradings. There is always an inverse relationship between impact cost and liquidity. So that's why we always should have a high liquidity. If you have a high number of shares are traded in the stock exchange, this impact cost will be very less. Are you guys understanding the point?
Yeah, understood.
Yes,
Or we can say it in
understood.
a different way. Impact cost means normally the impact cost will increase whenever there is a people are purchasing a lot of shares. Whenever people are purchasing a lot of shares, buyers are purchasing a lot of shares, that is called having high impact, low impact cost, because a lot of tradings will be done, right? Whenever the share price is low, definitely people will come forward to purchase a number of shares. So impact cost will be low. If no selling is happening, if trading is not doing properly in the stock market, then impact cost will be very high. Understood?
Yes, Mahesh.
There is a formula even for this. Just try to refer in the Google. You will get a formula as well how to calculate impact cost. If you want to know more about it, try to do research, but it's not relevant and necessary. And we will see the
Finally,
types of
impact cost is inversely proportional to number of transactions.
yes, transactions, liquidity and impact cost both are an inverse relationship.
Okay, understood.
Now we will see the types of orders. Normally, you guys may understand. So, if you are doing a trading in the stock market, do you need to observe the entire graphs, price, and everything? 60 seconds of a minute, every minute, every second, do you need to watch and see the graphs and prices? Not required. We have a facility through these types of orders. By using these types of orders, we can place orders automatically. So, types of orders. So, we will see those types of orders. The first one is IOC. Know what is IOC?
Immediate or cancel order.
Immediate or cancel. Suppose if you are executing the trade, suppose you are giving a buying bid. Let's assume buy this 200 shares at 120 rupees. If market price is available at 120 rupees, and if shares are available, 200 shares are available, then this trade will be executed. Otherwise, next second the trade will be cancelled. The moment you place the order, if the prices and if the securities are available in the market, then the trade will be executed. Otherwise, it will cancel immediately. This is called immediate or cancel order. Understood? Everyone. Understood, guys?
Yes, sir.
Immediate or cancel order means it won't wait for any prices or any securities. The moment you place the order, if shares are available and securities are available at the same price, the order will be executed immediately. Otherwise, it will cancel. And we have one more order called GTD.
It won't wait up to the share price come down or like that won't
It
happen.
won't. It won't. In the IBOC, it won't wait.
Okay.
We have other types of orders. There we'll discuss. See, in this order, GTD, not GTD, it's a GTD. Good till date. Good till date means the order is valid for rest of the day and will be cancelled if not executed at the end of the day. It will wait till 3:30 p.m. If price is not coming for that given bidding option, then order will be cancelled. Suppose, let's take an example, the same order book. The price are trading like this, 5250, 5250. See, this many quantity has given 500 quantity at a price 5250, but every seller is placing at 5252. The price is not available, right? So I don't want to sit in the front of system. So what I'll do, I'll go for this good till date order. So what I'll do, I'll just simply place that order and I'm giving a price 5250. So the order book, I mean my order will wait till evening. If seller is ready to sell at 5250, then order will be executed. If no one is coming at 5250, then order will be cancelled by evening. Getting the point?
Yes, ma'am.
In the good till date order means the order, whatever the order we are giving, it can be for the buying, it can be for selling. Order will be valid for one day, the same day, till evening. If it's not executing as per our instructions, I mean the prices and quotations that we have given, the order will be cancelled. If price come down, it can be for the buying, it can be for the selling, then order will be executed. But this order is valid only for one day. That is called good till date. Understood? Everyone. And we have a basket order. What is basket order? It's just a single buy and sell, but we can do different number of shares. We can add all shares into one cart, like we do Amazon shopping, right? What we will do Amazon shopping, if you want to purchase a lot of items, we will add all items into one cart, then we will proceed to purchase all in one go, right? Similarly, here also, in single order, we can buy or we can sell portfolio securities. Suppose I'm holding a portfolio like 50 shares of TCS company, 50 shares of Ashok Leyland, 50 shares of Wipro company. If you want to sell all the shares in one go, I will use this basket order. Understood? Everyone?
Yes, ma'am.
Yeah.
Yes.
Then we have an offline order. Offline? Offline order means normally during the off timings, like once market closed, we can perform a trading. Suppose even now also I can place the order. Suppose if you want to purchase HDFC securities, I can place now also order to purchase. But when it will be executed? Now the market is not available, but still I can place the order. But when it will execute?
When the market opens with the trigger,
The market
the same
opens
price.
tomorrow morning only. If the price is available as per my instructions and my prices, my security pricing, then only the order will be executed.
Yes.
That is called offline order. We can place, even if market is closed also, we can place the order. But order execution will be done once the market is opening. These are called offline trading. These are the types of orders we have in the stock market. Is everyone clear with this? Everyone?
Yes, sir.
Yeah.
Yes, Mahesh.
Then what else we have?
The stop loss order is there.
Yeah. Stop loss order. Yeah, very good. Stop loss order and also trading stop loss order also we have. Let's discuss about that one as well. Even before that, there is a one more concept. Marketing.
Stop limit order, sir.
Stop limit, stop loss order. That's okay.
Okay.
One more is there.
Yeah. Yeah, long position and short position.
That we
Limit
will
order.
discuss.
Limit order.
Stop limiter. That's what we are discussing. Not that one.
Market order.
Market error. Market error means
At that price only.
Whatever the price will be there, same price will be executed.
Order will
IOC
execute.
only, right?
IOC equals to IOC.
IOC only. Okay, we'll see the stop loss. Once I remember this, then I'll discuss about it. Getting actually so much for margin trading. Remember this margin trading also. First, we will discuss the stop loss order. Stop loss order and stop limit order. Do you guys heard about it? Anyone?
Stop loss order.
So what is stop loss order?
We sell the share, buy the share. Suppose if we'll put some stop loss. If it is triggers the loss, loss will be reduced. Suppose if I buy the HDFC share by 1550, if it is come by, I'll put 1540 as a stop loss. If it hits that, automatically trade will be executed.
Suppose, let me explain to an example. On purchasing one share, is purchasing TCS share at 50 rupees. Sorry, 50 rupees. Okay. Definitely there will be a loss or gain. So what you'll do, I'll put a stop loss order up to 45. I'm putting stop loss order as a 45. This means if stock price falls below 45, the stop loss order will trigger. The triggering point is where 45. If stock price touches at 45, the stop loss order will trigger. The triggering point is we are determining the triggering point. So what is the trigger? To sell the securities immediately. I am purchasing, first initially I purchased this share for 50 rupees. And also I'm giving the stop loss order up to 45. At this 45, you know what will happen? Once the stock price reaches to 45, immediately my share will be sold. Are you getting the point?
Yes, Mahesh.
Yes,
Here
yes.
I purchased, I kept my TCS shares for 50 rupees. I want to keep it as a stop loss order. What is the stop loss order? If it is going below 45, I'm pretty much sure if it is going below 45, definitely the share price will go up to 30 or 35 also. But if it is not 30, 45, if it is not reaching up to 45, it won't go that much. So I can keep it up to 45 as a stop loss order. As a trigger point, I given 45 rupees. In this case, suppose share price came down like this, 48, 47, 46, 49 or something. Then it won't execute. The share will be available in my portfolio. The moment if it touches to 45, whatever the price available in the next minute, next second, whatever the order book is available at the after this 45 triggering point, at that price, the price will the security will be sold. Suppose the next minute itself, the price is available at 44.49. The securities will be sold at 44.49 itself. Because once the trigger point has triggered, whatever the available price in the market, for that price, the securities will be sold. This is called stop loss order. In this case, what I am doing? What I'm doing in this case? I'm just giving the trigger point here. What is the trigger point?
40, 45.
Only I'm
For
determining
only loss, only for loss.
only for the loss. Trigger point only I'm giving here. This is called stop limit order. This stop loss order also, I'll tell you an example. Suppose the same example, we purchase at 50 rupees and I'm keeping the stop limit order as a 45. Here also I'm giving it as a stop limit order as a 45. So in this case, once order becomes, the price comes to 45. Once the order price comes to 45, it will execute only 45 or more than 45. Getting the point? Stop limit order means I'm limiting the loss up to 45. Suppose in this example stop loss order, the trigger point is 45. After 45, the share price went to 37. What will do? The price, the security will be sold at 37 also. If the security price drop immediately to 10 rupees, from 45 to 10 rupees. In this case, what will do? Price will be sold, the security will be sold at 10 rupees also. So in the stop loss order, I can give only the trigger point. After this trigger point, whatever the price available in the market, at that price, the security will be sold. Getting the point?
Yes, Mahesh. Yes.
Is everyone understanding or not?
Yes, sir.
But in this stop limit order, here I'm giving as a 45. So after this 45, if security price drop down to 47 rupees, 47 rupees, order won't execute at 47 also. If security price goes beyond 47, again if it increases to 48 or 49, then only order will be executed. Again, if it is coming down like 45 rupees or 35 rupees, order won't execute. Here I'm giving the stop limit order, as a triggering point, as well as I'm giving the limit. What is the limit? After this 45 rupees, whatever the immediate available next price. Let's assume 47 rupees. If the price is available at more than 45 rupees, 47 rupees, then only order will be executed. If it's dropping down again like this, 45, 35, 20, 10, the order won't execute. Again, order will wait till 47 or 45. Once it reaches to that point, then only the order will be executed. This is called stop limit order. Which one is best? Stop limit or stop loss?
Stop limit.
Stop limit. Stop loss order is also a bit risky because we are not determining the limit, right? After 40 rupees, whatever the price available, we can sell it at the price. It can be 42 rupees, 44 rupees, or 50 rupees, whatever the price, it will be sold. But in the stop limit order, we are determining the limit and also the loss we are determining. We are giving a trigger point as 45 rupees. Whatever the price, best price available after immediately, we will choose that one. If you are getting a better price, then only order will be executed. Otherwise, it will wait, it won't execute. This is called stop limit order and stop loss order. Is it a bit confusing? Is it confusing?
Yes, a little we need to work on it. Actually, we need to.
Yeah. Try to refer back the video or maybe a few examples in the market. You understand. Nothing worry. You understood about this stop loss order, right? Let me explain it differently. Let's take an example. I'm holding some shares, 1000 shares. Each share price is 25 rupees. So what is my portfolio value?
25,000.
25,000. This is in the morning. Let's assume 10 a.m. Okay. So what I'm doing, I'm pretty much sure, maybe I'm sure that security price may go down, but I want to sell the securities at a better price. So what I'll do, I'll keep a limit. What is that limit I'm doing? I'm giving a limit up to 23 rupees. Top loss order, I'm giving 22 rupees. Okay. Now, the security price coming to 24 rupees. Will my order executed?
No.
Security price is 23 rupees.
It won't execute.
No.
Order will be executed.
Not
No.
executed.
My security price is 22 rupees.
Executed.
Executed.
It won't. Right? Stop loss means once it reaches the trigger point. The trigger point is 22. Now my sold position is the selling position is triggered. 22 rupees is triggered. Now the securities are ready to sell. At what price?
22.
Drop down to 22 rupees, right? Whatever the
Yes.
next price. Let's assume the next price is 21 rupees. Will the order be executed?
No, 22 automatically executed, the stop loss.
The triggered point, 22 rupees is trigger point. The next immediate order price will be executed, not at 22 rupees.
No, stop loss order will be executed at the same price, Mahesh.
Is it?
Yes.
No. It will be executed the next. It will just trigger the trigger point only. Stop loss order means the trigger point only.
No,
Maybe
no,
trigger point 22 rupees. Next we can reach us to 35 rupees also.
No, if we that is the reason stop loss order, most of the people will not be add the stop loss because of this is the issue. Sometimes it will be triggered 22, immediately go up. Once the stop will give the stop loss order, automatically the 22 will be then it automatically execute. Reaches the stop price. Mahesh, if you a small example I have right now.
Okay.
Can I share my screen?
Yeah.
1 minute, please. So please give me the chance for sharing.
1 second. Okay, share it.
Okay. This is the paper trade. If I take the trade, new trade, silver I'll take. With this quantity and the stop loss, I'll put it as right now is 22.45. I'll put 21 as a stop loss. 22 is a stop loss. Buy. Where is that? Down, come down. Markets. I'm sorry. This is 1 minute. I'll take silver. So silver future. I'll take. This is the LPTR rate 2617. The stop loss is 26600. Intraday quantity is 1. Buy. Down.
Change the price again. It's problem.
Okay, already 26 is there now. Okay. And now it is buy. Oh, sorry. It will take. Suddenly it will jump. Silver price always jumps like that. I'll show 1 rupee like that only. If I give, automatically stop loss will be hit.
So whatever the price that prevailing in the market, at that price itself, the trade will be executed. It's what you are trying to say, right?
Yes.
Okay.
This is the if you want, anyone wants to practice that, this is the paper trade. They'll give 10 lakhs rupees to you in this website. They'll do it whatever they want.
Like, do you do algo trading also?
Everything.
No. Are you doing algo trading also?
Algo. What is mean?
Algorithm trading.
Algorithm trading means I don't understand. Please, I don't know the technical words. Normal trading.
Okay.
Normal trading. Hello.
Algorithm trading means we can determine the strategies. We can develop a code, Python code, and we can give a strategy. As per the strategy, it will work.
No, I will not do it. Only normal trading. This is today. If anyone wants to that, this is the front page. Paper trade will be there. Only mobile number will ask. They'll give the money also in this. We can trade for practice purpose. 10 lakhs rupees will be given.
Okay, if anyone want, we can try, but don't try with the real money. Okay.
No. This is only paper trade only.
Okay. Let me
Thank you,
share my
thank you.
screen. Okay, let's take it as the same price. So at 22 rupees, we are keeping it as a stop loss order. If market price comes down to 22 rupees, the order will be executed and will be sold at 22 rupees. Suppose with immediate action, the security, nobody, I'm pretty much sure, the security, the prevailing market price means the next is a trigger point only. Normally, in the most of the cases, you are saying it in real time. Suppose 32 rupees means it will trigger immediately whatever the price available in the market, it will be sold at 22 rupees. What if in the next second itself, the market is available at 21 rupees? Will it sell it for 21 or 22 rupees itself?
If it jumps directly 20 to 21, then it will take 21.
That's what I'm trying to say, right? Again,
If
you
it
try
is
to
jump,
confuse me.
no. If it is jumps, if it is
That
I'm
is the
saying
purpose
jumps.
of having a stop loss order. Stop loss order means we are giving the trigger point. That trigger point, our price securities are ready to sell. There is a concept, all right. Then I can give this normal. Why I have to use the stop loss order? We have other orders also, right? Normally, like we can give this order like 22 rupees, 22 rupees to purchase or to sell. Why I am using the stop loss order only? Why I am using stop loss order only? We can use good till date order also, right?
That is the reason I'm saying stop loss, where whatever the stop loss will give, it's execute only the
No, see,
22 trigger.
I am purchasing the securities.
Okay.
25 rupees.
Okay.
I can go for the good till normal order also, right? I'll provide 22 rupees. One reaches, let's sell it for this one, 22 rupees.
Yes.
Then what is the purpose of having the stop loss order? Can I call it as both are same?
Both are same. I think so.
Both.
Tomorrow I'll check once again in the market, live market.
Practically in the market, it may happen like it will sell it for 22 rupees only. What if within a fraction of a second it reaches to 10 rupees or 21 rupees?
No. Tomorrow I'll
In
live
fact,
market.
the drawback of stop loss, the drawback of stop loss order is this one only. Whatever the price available immediately in the next price, at that price only security will be sold. That is called stop loss order. That is, in fact, that is a drawback even. But in the stop limit order, we determine the target and also we're giving the limit for the loss. What is that limit for the order loss? Suppose if the market is at 22 rupees, it reaches 22 rupees. Again, the security price went down up to 21. Again, it won't execute at 21. If the price is going beyond this 25, 20 rupees, I mean above 21 rupees, at that price only security will be sold. Again, if it is dropping level like 22, 21, 20, like that, it won't execute. Whatever the next trade available, more than that next trade should be available in the market. At that price only, security will be sold. That is called stop limit order.
Mahesh garu, just look at a chart. I have sent a message.
What is it?
There are two types of stop loss order: stop loss market order and stop loss limit order. Maulik garu saying stop loss market order, and you are discussing about stop loss limit order. Both are there actually.
Stop loss order?
Market order and stop loss limit order.
Yeah, just now we spoke. This is a stop limit order.
Maulik are talking about stop loss market order. They are talking about stop loss limit order. Both are there actually.
Okay. Even I'll also check with my friend about this stop loss order. Because I'm pretty much sure about this.
Tomorrow also I'll check both orders in the live market. I'll take the screenshots also. We'll see.
That's what I'm saying. Don't check in the live. In the trading, there won't be that much fraction of seconds changing volatility, right?
No problem. But we'll take a smaller price. One share at 5 rupees, 10 rupees. That's not a problem. I'll
Okay,
check it.
even I'll also check with my sir.
I'll check it.
You guys understood, right? What is stop loss order and stop limit order? Everyone? Hello? Hello?
Sir, yes, sir.
Yes, bro.
Everyone?
Yes,
Jay
Mahesh.
Kumar, Jayant, Jayshi, Jyoti, Vanaja, Manasa.
Yes,
Everyone
sir.
understood, right?
Yes, sir.
Can do some practice on the stop loss order and stop limits to stop limiter with examples or something. You will get an understanding how it will work exactly. Okay. Then we have margin trade. So I'll cover this margin trade when we are discussing forward contracts. Okay. Again, we have a few more terms in this stock market about circuit breakers and also stock halt. And what else we have? We have to cover about Sensex. I'll write here. Always alphabet. I'll show you how to calculate the Sensex index as well. Why there is always a difference in BSC and NSE points. What else we have in secondary market? Double trading. Talk about gray markets. What else? What else we have?
The action market is the action market.
Okay, auction market. I'll write in the top. Then anything else? No, stock split is a corporate action. Square of long position, short position. So we'll cover all these points in the tomorrow class so that we can close the secondary market also by tomorrow. Then we will start with the bond market and cap stock activities or investment activities. Okay, tomorrow we can wind up this secondary market. But before that, everyone should be clear with the order types, IPO, secondary market, stock market, pre-trading, post-trading and all, because these are going to be basics. If you are going to talk about trade life cycle, yeah, one more thing is trade life cycle, very, very important. Trade life cycle management. This one also we have to talk. Okay. That's all, guys. And also brokerage jobs. Suppose we are doing a trading. Are we having a trading with the stock market? Can we have accounts with the stock market?
No, we don't.
With whom we are having accounts then?
Brokerage apps.
We are not having a direct accounts with the stock market, guys. We are just having an interaction with the brokers, stock brokers. We have a Zerodha, Angel Broking, Finisher. These are all called brokers. We are just having accounts with the brokers only. Again, those brokers have an account with the stock market. Directly, we cannot have an account with the stock markets. So what these guys are doing in the brokerage apps, we are giving instructions to the brokers. Purchase this many shares, sell this many shares. On behalf of us, they are executing trades with the stock market. That's how the execution will be done in the stock market. We will see the two-way communication, two-way buying and selling, how the shares will be transferred from one account to another account through brokerage apps. Money will be transferred, how money will be transferred, how the shares will be debited and credited into the demat account. These topics also we'll discuss tomorrow. Any doubts as of now?
No, Mahesh.
About secondary market?
No, Mahesh.
All good? Everyone?
Yes.
Have you guys completed this episodes?
Yeah.
You have given a web series, right?
Yes. Yes.
How many episodes completed?
3 completed.
Three,
Let's
sir.
stop the recording.